Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh. Hope you're doing super well, guys. Long time no see. Long time no see. Long time no see. I didn't make about English video, guys. So today we'll be talking about Pambiradam, Tamambam Day 1 Day 2 Day 3 in macroeconomic price action. Daily time frame price action, guys. So today we'll be talking about macroeconomic daily everyday price action. How the price action, the zones, the fixed price action zones, the breakout, the impulses is your enemy. So you have to know how your enemy trade. You can win over your enemy. You can win with your enemy, guys. If you don't know, they get you somehow, somewhere, slap you in the face. Okay. And take you deposit. Like that, guys. Trading is simple. Trading is simple. So I'm here in hourly chart. Why I'm here in hourly chart? I'm using session breakers, AD session breaker. This is session breaker, day-to-day session breaker. That's why I use him for trading platform, guys. I don't use it in trading view because it's too much for me, guys. I use a platform. If you know what you're doing, you need to use only MT for trading. You don't need to use a trading view platform because most brokers, my broker, don't work with this and a trading view platform. You can't open trade that site. So it's for me it's useless to use trading free platform because I have to focus my drawing on MT4 trading platform, guys. Okay. Going back to day 1, day 2, day 3. Everything is day 1, day 2, day 3. You need to count the 3-day cycle, guys. 3-day cycle. This one, day 1, day 2. You need to do 3 days price action or 6-day price action or whatever you call it. See, where market is spending the most of time is about price action is where market is spending 3-day compound area, 6-day compound area, 5-day compound area. It's where market is spending most of the time, guys. So understanding that kind of price action, it will be a better person, guys. All right, coming back to the bumping at them day. This was like specifically this was bump day. Actually market was bumping up, higher high, higher low, higher high. So there's no lower low here. Also the bumping up, the closing breakout, single day closing breakout, guys. Okay, this was a bump day. Okay, this is a breakout day. She closed oh no, that she closed breakout. That she closed breakout. Let me check. Friday that she closed breakout. No. She closed inside. Okay. Okay, in this particular case, what we do? Okay, in order for me to trade tomorrow, what I need to do is here. This was what? Trade in previous daily trading range. So what I need to do is here, previous daily high, previous daily close, my strike zones. I need to trade from my strike zones, and specifically you need to understand the strikes. What's in the strike zones? This one I call it high. This one I call it low. You can call it support. You can call it resistance. So I'm just give you definition, guys. When you understand the definition, you can use it in your own definition. You can use your own understanding, guys. So closing price, I call it what? Philip zones. Price action Philip zones. Price action confluences. I call it supply become demand, demand become supply area. You see, guys, together, guys. So when you understand like that, so from this, I need to get this information from what? From previous daily range. That bump day. Okay. When I get that previous daily range, what I need to do here, yesterday price action, what I need from here? Impulse, last impulse. Last contra break. That's what we see here, impulse. The market moving with the impulse, momentum trading. So Friday, Monday should be sell. So Monday should be sell, but we need confirmation price need to break the confluence area, guys. After the market break confluence area, breakout pullback continuation, guys. 3 things market do. We just trading simple basic price action principles. Not overcomplicating, nothing. Just keep it simple things. Bump day, dump day, trigger day, bump day, bump and a dump against the bump. BAM and DAM is about momentum, impulse correction, impulse, guys. BAM is impulse. DAM is correction. No, and BAM and is correction. BAM next BAM. See that? So it's about the terminology the mafia use. That's why don't get confused. It's about impulse correction, impulse, guys. What happened Friday is here? Previous daily low. It's Friday, right? Let me show you examples here. Friday here. Previous daily high and low. What I see here? There's a trading range. High and low, support and resistance. High and low, supply and demand, whatever you call it. High and low, the reference point for everything. Okay. Closing price is what Phillips zone is. Price action Phillips zone is. The price action Phillips zone is. The price action confluences. You can call it supply becomes demand, demand becomes supply, whatever you call it. Okay, going back to I used to actually in 15-minute time frame, guys. Reading the last impulse. I'm reading the last impulse here. What do you see? Last impulse. Just told me like the last big formation high and big formation low, and don't trade against the big formation high, big formation low. Actually, the market was dancing a bit well in this big formation high and low, and time into this demand zone area, and the market creating higher high after outside, then they explode upside. They play inside too much, then go up there. But why? The market they want to break the confluence area down. See what I'm talking to you guys. Coming back the other day before, how we traded. How we trade this price action. I was expecting I was selling this day. Previous daily high, previous daily low, and previous daily closing price, which is confluence. Let me use line. Okay, going back to 15-minute charts. What do you see here? Last impulse. What do you see here? Last bearish impulsive move, breaking all the confluence down. So the momentum trading is downside. So the market bump in London session is collapse. We were selling that day, guys. Again, the break contra break here. Channel break, but then in session in the news time they collapse back again. In the meantime, they break. Again they show us new impulse. So this was just correction again. So this was here demand zone. So the demand zone last impulse was respected and new impulse was respected, guys. So the market is about understanding the zones and the impulse. Impulse will tell you momentum, pump it down momentum, you see, then you follow that momentum. So you must understand the impulse is your enemy. Oh, watch out, be careful. Okay, in this particular case, we're going back to what? Other day before. What? Other day before here. Other day, this day went through, right? So what we're going to use here, previous daily high, previous daily low, is my strike zones. Also, I need to use my confluence zone, which is previous daily closing price. So in this particular case, what I want to see here, last impulse. So what do you see here? Last impulse. What? Last impulse for the day. So last impulse for the day, the market corrected back there, corrected back there, and give us new next impulse, guys. Free cash, collapse, guys. It's about catching the second wave. Always catch a second wave. Always catch a second wave. Don't try to catch a fast wave. It's dangerous. Fast impulse, second wave. With fast impulse, second wave buyers. Okay, so fast impulse, second wave. You see it? Second wave is where the money is. Pumping free cash. If you don't know that, you will be losing, and the brain will keep teaching you lessons. Are you guys together? Like it did to me. All what I'm sharing here, I learned it hard way, guys. I'm not lying to you guys. I'm not lying. The game is a real It's not easy. Nobody can teach you the way I teach you guys. Almost like 4 or 5 years, I'm just sharing you previous daily high and low, momentum respect and pumping free cash. You see, bump and dump is last impulse. What's a bump? Impulse. Dump, impulse. Impulse is your enemy. Stacy back always say so. If you don't know how your enemy behave, they will keep catching you guys. It's not easy. It's not joking matter. It's not a joking matter. I don't want to tell you lies here. This was trading day here. I was looking for sell around here. Why I'm looking for sell here? Okay, this buy I didn't look it. London I tried to sell, but no. See, blow off. But I'll tell you why. 1, 2, maybe yeah high. I know. Why I was looking this day sell? Why I was looking for this day sell? Let me show you here. The previous daily high and low, concern break. The last market I want to break concern break. Market I want to break concern break. But I see here the demand is too far from me, man. So previous daily close is there. All right. So I'm not buying. Okay. When I try to buy, you see, what they do here? One candle they stop hunting here. So that's why I'm very careful, because at the moment they stop hunting here, oh, my account is gone. I went through that pain. That's why I'm not selling. I'm not buying up high. I'm waiting. You see, everything I wanted to do, guys. So I said no. Let me wait for myself for the New York session, and I catch this sell for up here. No problem. I catch 50 by 50. No problem. I don't want to buy, because now when I buy here, it's like they stop hunting and run. My account wants to go just minutes. In a matter of minutes, guys. Then that's how they affected my trading psychology. I say, let me stop. Whenever I go up, to come down. I'm waiting. When I fail, I use a small stop loss. But when I lose this one, let me say when I start to counter, I'm using a stop loss. They hit my stop loss, no problem. And now they can be big trade. And now they come back. They come back this area. Because here, previous daily closing price what? Is supply become demand. The Philip zone. The market seeks those areas. They come back. They're not going up there. They come back this level. Especially when they come back, they collapse. They hardly collapse. They come back very fast. That's what I want to catch, guys. That's what I want to catch. Okay. Monday, previous daily high, and previous daily close. What you can see, counter break, trend line break, counter break, trend line break. See, that's why Monday momentum was just up. See, because the demand was too much. Because also the Mondays I make mistake most of the time. Why? Because previous weekly high is also demand is increasing. That's a problem. That's the reason. Mondays I make mistakes. The reason I make Mondays mistakes is what? The weekly price action, so pushing up the price very heavily somewhere. That's why you cannot get most of the time the same price action for other days. Just be careful. So I rather most of the time Mondays I try to stay away from the market. If you keep that simple, it will be simple. If you think that's simple, it will be simple. If you don't think that's simple, it will never be simple. Okay, let me think about the last impulse. It's here, last impulse. Monday, market rally. This day, market, where's the last impulse? It's here. Small correction, the market rally. Last impulse. Last impulse show you momentum. Previous levels show you where the trend is. Last trend. You can keep that simple. That's you will always follow last impulse. Move to. So this what was second leg impulse. This buy was second leg impulse. This buy was second leg impulse. This buy was second leg impulse. This sell was second leg impulse sell. This buy, this sell was second leg impulse. This buy was second leg, second wave impulse. Okay, this buy is second leg impulse. Are you guys together? If I keep that simple, it will be simple. If you can't keep that simple, it will never be simple. So the market only do two things. They bump and correction, bam. They dump, correction, bam. They bam, baradam, bam. It's impulse correction impulse. Impulse correction impulse. It's about understanding the deeply and mastering the process. Mastering the process and master market research. Keep it simple, traders. keep learning, keep getting better, and may the market be with you. Assalamu alaikum wa rahmatullahi wa barakatuh.